Let's start with Tiffany and help me to understand this, because third quarter revenue for Tiffany was light. The same store sales were lower than expected. I wasn't expecting that Tiffany, in terms of the stock, would have its worst day in nearly 4 years. This wasn't a good report, but is it really as bad as? Is it really? Wow, this is the worst day in nearly 4 years. Bad?
No, it's not that bad. But the reason for the weakness in the top line specifically was China, and if the Chinese sales, whether it's tourists coming here or selling in China, if the Tiffany brand is not resonating either because of a perspective on the United States currently by Chinese consumers or something else, that is a big chunk of where you want your growth to be coming from in future years. And so when you I don't know if you start subtracting that from your growth equations or whether you just say this is a blip caused by current politics or what. But I think that's the question the market is asking by selling the stock off today.
And this was not, as we've seen in some cases, this was not a situation where Tiffany shares had been run up to some enormous degree. So I'm wondering, when you look at the stock now, do you see it as a value play? Is this a cheap stock right now? Which always seems odd to say whenever you're talking about a company that's known for selling diamonds.
Yeah, I don't know that I would call it a cheap stock right now. And then again, there are a lot of companies that I would say, even after a significant decline, are not cheap. But at 22 times earnings, no, not really. It's not got the sort of growth story that would make me especially interested in it at that price, especially if you've got questions about how things are going to play out with China over, maybe not over the long term so much, but I think I don't have any good read on what's going to happen there over the next couple of years.